What you see on my screen is State Bank of India's price chart since 1999, right? These candles are yearly candles showing you the price movement within a particular year, right? Now imagine that you bought this stock in 2008, the beginning of 2008, and you said to yourself that you like State Bank of India as a company and you want to hold it for, let's say, 15 years of time period. You thought that it's a long-term stock for you. I'm sure you pick up stocks for your long-term portfolio. Right? Now, as an investor, the experience that you will get out of this price movement is what I want you to focus on. In 2008, this stock fell by almost 43%. And I can guarantee that you won't be able to hold this stock. You will sell it off the moment it falls by 20%. Why? Because you will get panic. Although this fall or this crash was mainly due to the financial collapse, it was the global macros. Nothing wrong happening in State Bank of India. But because of this huge panic, what will happen? You will sell off your long-term stocks as well. Forget about the short-term stocks. You will sell off your long-term stocks. Not just 2008, have a look at 2011. This stock again fell down by 43%. Again in 2015, this stock fell down by almost 30%. In 2020, this stock fell down by almost 20%. These are examples, and what we call this is volatility in the stock market. And because of this huge price swing, what happens is that you will lose your patience. The fear will kick in and you will sell off your long-term stocks. It is extremely easy to say that hold your stocks for mid to long term, but I can tell you that practically it is extremely hard to hold a stock when it is falling down, right? But if you're able to hold your long-term stocks, then what will happen? Hopefully you will make wealth over a longer period of time. For example, if you look at State Bank of India, between 2007 to 2025, it has gone up by almost 654%. Again, you can do the calculation of CAGR. And again, this is just an example I have shown you. Point is very, very simple. If you are building a long-term stock portfolio, you need to be able to hold your stocks. Of course, periodically review them. And if there is a genuine reason for you to exit, of course, exit a stock. But because market is falling down, because there is some sort of global panic is happening and Indian stock market is not performing well, you don't sell your long-term stocks. Now, let me give you completely different example. Okay, here have a look at HDFC Bank's chart. Again, not a recommendation. These are again all yearly candles. Look at in 2017. Let us imagine that you bought this stock in the beginning of 2017 and you had a very long-term outlook about this stock that I will hold it for the next 5 years maybe. But what happened in 2017 is that by the end of 2017, the stock was up by 50%. Now it is extremely difficult for the greed to not kick in. The greed will kick in. You know what? I have made 50% profit already. Why will I hold it? Just sell it off, make the money and take an exit. This is what practically happens. There are a lot of people who say hold your stocks for long term, but practically I can tell you almost I spend 4 to 6 hours every single day in stock market, right? Looking at various aspects of analysis, and I can tell you that it's extremely hard to hold your horses. And you know the biggest contributing factor to this problem is demat account. What is happening in the demat accounts? By just using our mobile phone, we are able to just buy and sell. A lot of people who used to be investors have actually become traders. They are not holding their stocks even for 2 months or 3 months. A stock goes up by 10%, sell it off. The stock has fallen by 5%, sell it off. There is no long-term, forget about long-term, there is no mid-term thinking as well. And the main intent of creating this video is to talk about greed and fear. So the key question is, how do we control our greed and fear, and how do we continue to hold our stocks if we believe in those stocks? So for this, there are 2 options. Option number 1 is very, very simple, that we create 2 different demat accounts, right? Demat account number 1 is only for long-term stocks and demat account number 2 is only for short-term stocks, or let's say for swing trade, etc. Now in this case, what could happen is that we forget about our demat account number 1. We do not operate this on a daily basis, while demat account number 2 is what we operate on a daily basis, right? This can definitely be a useful workaround. Here the challenge is that what happens if all of a sudden the market falls? Would you be able to ignore demat account number 1? I think again the same emotions may kick in. And the second problem here could be that when you're filing your income tax returns, you have to take P&L statements from 2 different demat accounts and file your returns. So it might create more work for you when you file your tax returns. But definitely this option is better than having everything in one single demat account, because the moment you see the price movements on a daily basis, you might be tempted to sell off your long-term stocks. But let's imagine option number 2. What is this option number 2? Let us imagine that there is a demat account. You have your stocks in that. but it does not allow you to sell a stock immediately. There is a lock-in period, let's say 24 hours or 48 hours. Now, right now, there are no demat accounts which is allowing this feature. But recently, Zerodha has launched something called a secondary demat account, and their attempt is exactly what I have explained here, is to stop the impulse selling. Now, what is the secondary demat account? What are the benefits of this secondary demat account? And more importantly, the tax advantage that I want to talk about. Let me cover these points in simple 3 points that you need to understand. So the concept of secondary demat account is extremely simple. Let's say you have a demat account with Zerodha today and you have 20 stocks in it, right? What you can do is you can simply go and open something called a secondary demat account. The process of it I will explain to you in a minute, but let's understand the features and the benefits of secondary demat account. Now, what will happen is that the moment you open your secondary demat account and it becomes active, what you can do is, out of these 20 stocks you had in your primary account, identify which are the long-term stocks. Let's say there are 5 long-term stocks that you want to hold. You move them, you transfer them from primary to secondary account, right? Now, the benefits of doing that is 3 folds that I can talk about. Benefit number 1 is that the moment you move these 5 stocks out of the primary to secondary, these 5 stocks will not be appearing on your kite holding. You will only see 15 stocks on your kite holding. Therefore, you're not seeing the daily price movement of these 5 stocks, which is very, very good, because what will happen is this price movement is what drives your behavior, and you will end up selling these stocks. You will not be able to hold them. And you thought that these were your long-term stocks. So why do you want to see the price of your long-term stocks on a daily basis? You don't, right? Now the question is, where does these 5 stocks can be seen in Zerodha's account? Simply go to the console. You will still see these 5 stocks. You still own them pretty much as you were owning them when you had only one account with Zerodha. But by simply moving these stocks from primary to secondary, what you have done is you have completely stopped the impulse selling of these stocks. Now comes the benefit number 2. Benefit number 2 is what? Let us say that out of these 5 stocks that you transfer to secondary demat account, for whatever reason you want to sell them off, right? What you need to do is, before you sell it off, is that you first transfer these 5 stocks back from secondary to primary account. And this transferring process will take minimum 24 hours. And this 24 hours of delay will hopefully help you avoid your impulses. You will only sell it if there is a genuine reason for you to sell the stocks and maybe have some money back for whatever reasons if you have to sell it. But this 24 hours of delay hopefully will stop your impulses, because I've seen a lot of people, all of a sudden the market is falling, the stock prices is falling, or the stock prices are going up. They will just sell it off immediately because they are not able to control their impulses. Here, by this 24 hours of delay, it ensures that you are thinking it through. You are making a decision which is thought through, not by just impulse. So that is benefit number 2. Now comes the third benefit, which is the tax optimization. Let me give you some scenarios so that you understand this picture very, very clearly. Please pay attention now. So let us take a scenario. Let us say that you only have a primary demat account, okay? And 1st of January 2025, you bought a stock, 100 quantities, 20 rupees is the price. So you invested 2000 rupees. Again, 1st of March 2025, the price of the stock has gone up to 25 rupees, and you think that you want to buy more because you know what, this is going to continue to go up. You buy another 100 quantities, right? Another investment of 2500 is what you made on 1st of March, right? Now let us say comes 1st June 2025, the stock has gone to 30 rupees of price. And now you want to partially book your profits. You want to sell off 100 quantities, right? Now what happens is that if you have only primary demat account, is that the rule of FIFO applies, which is first in, first out. So which out of these 200 units get sold first? The date that you got earlier, which is 1st of January 2025, that 100 units will be sold off, right? These were bought at 2000 rupees investment level. The current price is 30. So you are selling it at 3000. So 3000 minus 2000 is your 1000 becomes your capital gain or your profits, right? And because it is less than 1 year of time period between 1st January 2025 and 1st June 2025, you will end up paying short-term capital gain at 20%. So you end up paying 200 rupees as the tax here. Now, if you had the secondary demat account, let us take that scenario. Okay. So let us say again, same example, primary account, 1st January 2025, you bought 100 quantity, 20 rupees, 2000. But on 3rd of January, you moved these 100 units to secondary account. I'll show it to you how to do very, very easy, simple process. Let's say you move it. Again the same process, 1st of March you got another 100 stocks, same scenario I'm taking, 25 rupees is the price, so 2500 is your investment. Now on 1st of June 2025, when you're selling these stocks from your primary account, because those stocks that you bought on 1st of January are not in your primary account, what will happen here is that these stocks units that you got on 1st of March 2025, they will get sold. Okay, and here the capital gain is how much? Only 3000 minus 2500, which is 500 rupees. So you are going to only pay short-term capital gain tax on 500 rupees, which comes out to be 100 rupees. Therefore, your tax liability here has come down by 50%. So simply by moving your long-term stocks to secondary account, you are not going to pay taxes. You are going to pay taxes only on the stocks that are in primary account. Now, it's not always guaranteed that you're going to save taxes in every scenario. It is entirely possible that in some scenarios you may not be able to save tax. But if you play it smartly, if you move your stocks from primary to secondary, then definitely you are not touching your long-term stocks. You're not paying any long-term capital gain taxes on them. The short-term stocks that you're having in your primary account, you will continue to pay your taxes as per the applicable laws. So hopefully these 3 benefits that I've talked about will help you make that decision. I'm definitely going to explore the secondary option. I'm going to move some of my stocks from primary to secondary so that I'm not really getting affected by the day-to-day volatility in the stock. And whenever I'm reviewing my stock, of course, if I have to sell them, I move them back from secondary to primary and then sell it off, right? That way, at least I am able to control my impulses. I'll give it a go and see how it goes for the next few years. And if I think that is helping me, then it becomes a process for me. Hope you like this secondary demat account feature. If you're liking this video, hit the like button. Let me know in the comments a simple thank you. Also, you can consider joining my YouTube community where I speak about stocks, mutual funds, ETFs, various assets. If you want to practically learn, that's the community you need to join. Simply go to my channel, click on the join button and be my guest. Feedback of this community has been excellent. You're going to learn a lot almost on a daily basis. With that, let me now quickly walk you through how can you open the secondary demat account in simple few clicks and how can you move your stocks from primary to secondary. So here is how to go about opening your secondary demat account in a simple step-by-step process. Simply log into Kite, tap on your user ID, then go to your profile, click on manage account, then click on this little arrow button, press on demat, then tap on secondary, continue. Now here you will have to enter your nominee's PAN number and then you click on terms and condition checkbox and continue. You will see the webcam verification screen coming up. Complete that process. After this, you press on sign now. Then you enter your Aadhaar number, tick the checkbox, you will get an OTP. Enter that OTP and you are done. Within 48 hours, your secondary demat account will be open. You'll get a confirmation email also from Zerodha and you will be able to see the secondary demat account in your demat accounts. You will also get your T-PIN, which will be different from your primary demat account. So this is a very, very simple process. It will hardly take you 5 minutes of your time to finish creating your secondary demat account. Now let me quickly show you how to transfer your stocks from primary to secondary account. Simply log into your Kite platform and tap on your user ID, click on portfolio. Here you will see all your stocks on the console page. Now tap on the stock you want to transfer from primary to secondary account. Here you enter the quantities, then you click on continue. Then you go to the authorization page, you say continue to CDSL. Normal process of now entering your T-PIN and OTP follows. So just follow that process. Because you're doing this first time, what happens is that you have to add your secondary demat account as a beneficiary, right? So there is an additional step. What is that additional step? And this is just one time step. What is that additional step? That CDSL will send you an email, verification email between 3 to 5 p.m. the same day when you're doing this transaction. And they will ask you to add this secondary account as the beneficiary account. So in that email, there will be a link. What you do is click on that link. Then it takes you to a page where you need to enter either your PAN number or your primary demat account, which is the 16-digit account number. You submit and then your secondary account will be shown as a beneficiary. So tick it, generate the OTP, enter the OTP, accept and OK to complete the process. Now CDSL will send you one more email, which is a confirmation email, and they will send it at around 5 p.m. same day. So you confirm the transfer. In that email itself, there will be a link. Just follow through the process and complete the transfer. Please make sure you confirm this entire process by 8 p.m. so that your stocks are moved from primary to secondary. It takes them up to 24 hours for these stocks to move from primary to secondary. You can simply go back to your secondary demat account and see these stocks coming up in your console. That's it. The process is very, very simple, and you can follow exactly the same process to move it from secondary to primary. Hopefully you don't need to do it very, very regularly. You will do it whenever you're moving a stock that is a long-term stock from primary to secondary. You're not going to do it on a daily basis, but this will help you ensure that you're not selling your stocks on the impulse, and hopefully you will also be able to optimize your capital gain taxes and take advantage of this feature. Now let me know in the comments if you're going to give it a try to open your secondary demat account and transfer your stocks to secondary demat account. I am definitely going to use this feature because I think it makes a lot of sense for the long-term stocks, so that I'm able to avoid the impulse selling of my stocks. I hope you liked this video. If you did, press the like button. I'm going to see you in my next video. Until then, keep rocking.